Hello, techies. Welcome to the Tech Ties Africa podcast, where we'll bring you the latest stories on tech and startups in Africa. Catch us every Thursday at 10 a.m. WAT on techtidesafrica.podbean.com. Let us know what you think by giving us feedback in the comments or on our socials. Now, on with the show. Hello, everyone, and welcome back to the Tech Ties Africa podcast. So this week, rain has been falling a lot over here in Nigeria. How is it at your end, Karen?
Kenya is good. This week we are obviously celebrating Saba Saba. We have become the nation that protests everything. So remembering those who came before us and did some significant protests. So a really good week. Looking forward to this conversation and to see what's happening in tech and startups across Africa.
Yeah. Last week we had a guest on the podcast, and that was the CEO of Vind. Some interesting insights that we got from that conversation, and I think one of the stories we would cover today touches on some of the challenges he talked about last week. So let's get into it, starting with AfricInvest. They launched a PAPS card about a week ago at this point, and it's meant to facilitate trade and transactions, obviously, throughout the African continent. We have talked about cross-border payment issues in Africa and the challenges that comes with that. The AfricInvest, they want to solve this challenge by creating this card scheme called PAPS. So PAPS is the Pan-African Payment and Settlement Systems. And so this card is meant to facilitate transactions in Africa. I think this is an interesting one because we have talked about cross-border payment issues on the podcast a lot and the challenges involved. And I think in a podcast episode a while ago, we heard from some CBN execs that it wasn't just a infrastructure issue, it was more of a policy and regulation issue. So it looks like a number of African countries are coming together to work on this scheme to help to facilitate transactions in Africa. So I would love to hear your thoughts on this, Karen.
Yeah, I saw this and I was really happy about it, to be honest with you. I'm always happy when I see something that's built in Africa for Africa. We have talked a lot about cross-border payments and the disparity within our currencies and all these regulations. We've talked about a lot of things that are slowing down trade in Africa across borders. And some of these solutions, I believe, will be a great addition that will reduce the friction that we have when it comes to transacting amongst ourselves as African countries. Right now, when we're using our card systems, they're routed through global systems. So the kinds of fees that we have to pay are quite high. If you're using something like Swift, it's about 5,000 Kenya shillings. That's about $50 for a transaction. It doesn't make sense a lot of the times. Recently, I withdrew something and the fees that were there, I won't go down that rabbit hole. And then we've also been talking a lot about data sovereignty as a continent, and we are seeing a lot more countries becoming very sensitive with the data of its people and trying to keep data central and within the borders of the country. So I think this solution cuts across that, right? We're going to see decreased fees. We're going to see a lot more data control. We're going to see us retaining value as a continent, because exchange rates are insane sometimes, especially when you have to do it using the dollar. So I think we will see a lot of economic benefits from cards that are African and that are doing the processing within the borders of Africa. So I'm very excited for it, and I think it will improve trade, but it will also reduce fees, which is something we have discussed when it comes to payment solutions, and ensure data sovereignty for this continent, which is another very important and key point. So I'm very excited about it. I really like this.
Yeah, very interesting development, and it would be like you said, the fact that we're trying to control our data and continue to facilitate development within the continent is always a positive development. So I'm happy to see this. And yeah, we'll see how the implementation will be, because in theory, it's easier said than done. You have this card that you can use to facilitate transactions within Africa. Or how does that actually play in practice? That would be one to see. But I'm here for it. I hope it does get enough traction from enough countries and it becomes like the solution. Because like you said, with fees and speed of transactions as well, if you're not having to go through these global institutions and everything is facilitated within Africa, then we would see those positives like you talked about. So I'm here for it. I'm here for it.
Yeah, it will live and die on the seamlessness of its execution 100%. MTN Nigeria has entered the cloud race. Another one of Africa building in Africa, and still on data sovereignty, which is something that we have been discussing as a trend that we have been seeing this year. A lot of investment is being done in data centers, and they've just completed the first phase of a $235 million data center that is in Adabengwa, Sifiso. This is its first investment in commercial data hosting. It's a tier 3 data center facility, which just shows the commitment of MTN to enter this market, and the amount of investment that they're placing in this is quite high. Nigeria seems to be playing a big role in data centers and data sovereignty in Africa at the moment. And I'd like to hear from you, Kevin. What are your thoughts and how do you see this playing out?
So MTN entering the cloud data center space is quite interesting. But the moment I saw it, I immediately thought about the fact that on the podcast we have talked about Safaricom, I think 2 weeks ago, doing something similar as well. They are creating data centers to enable some of the cloud services that African startups especially would rely on, services like Amazon Web Services for their cloud compute. MTN and Safaricom are now looking at building this infrastructure for our local startups and businesses. So it's quite curious that both of these very big companies are moving in this direction. And then obviously the moment they are moving in this direction, they start to think about AI. I think that's also another driving motivation for them, because they can't see the growth of AI. They can't see that it would be a very important part of the next couple of decades. So they are trying to position themselves to be the backbone that would facilitate this technology. So it's a curious move for me, but for MTN Nigeria especially, in recent times, the actual core of their business, which is telecommunications, has been bad. And so I was wondering why they were making a move in this space, because I'm like, I think you need to fix your core service first before you start to move into this other space, because I don't know what happened, but in recent times the service has been really bad. And I also saw some of that echoed in social media conversations. Then again, this is a different business opportunity for them, and they have the financial ability to pull this through. So it's quite interesting. Obviously, it would help local startups in Nigeria to pay lower costs, especially when it comes to cloud compute. We know that a lot of the startups in Nigeria and in Africa, they spend a lot of money on their cloud hosting and things like that. So this would help to reduce some of that cost, because you'll be paying in Naira, and it helps to make the transactions easier. You don't have to go through using fancy services like virtual cards and things like that. This is just phase 1 of the project, and we'll see what happens with phase 2 of the project. But I am more on the fence with this because it's MTN Nigeria. Maybe if it was someone else, but it's MTN Nigeria, so I'm a bit more skeptical.
Okay, not a fan of their services. I think
I
one.
actually use MTN Nigeria, and that is why I I understand the struggle at the moment, and that's why I'm not a fan. But then again, I guess we'll see. Yeah.
Yeah, I think another thing that comes to mind is both of these companies are telecoms. And so it begs the question, is this a trend that we're going to see where very large telecoms that are established in the market will begin to invest in cloud and data centers? Very interesting thing to look forward to and see if this will become a trend.
I mean, Safaricom and MTN are the few players that can make a move like this. But then there are other large telcos like Airtel. Do we see Airtel make a play in this space as well in the next couple of months? That would be very interesting to see. But then the cloud space is a very tough space. We already have Amazon Web Services in this space that dominates a large part of the market. And in Nigeria, we have Equinix, Main One and Rack Center, which are already established players in the space. And MTN seems to want to take them head on. So we'll see how it goes. Moving forward, the Nigerian government is trying to link the entire borrowing history to the NIN. So the NIN is the official national ID card for Nigerians. And the Nigerian government wants to link it to individuals' credit history. We talked a lot about credits on last week's podcast. If you have not listened to this, we had a guest, the CEO of Vind, that's building the credit operating system of Africa. They want to do that, very ambitious goal. On the podcast, he talked about some of the challenges with collection, which is that some of it is you have to aggregate financial records from various sources, and that can be very tough. And it seems the Nigerian government is making a move in that direction to link the credit history to the national ID number, and they plan to put some severe penalties on this in terms of things like not being able to renew your international passport and some other things. So this is quite new, and I am curious because in Nigeria, we don't really have this credit infrastructure. Is something that we are beginning to see fintech startups like Vind and other players in the space. Carbon, I remember, is one of them, and now are trying to solve this problem. And now it looks like the Nigerian government is trying to help solve this problem as well. So I'm not too familiar with how it works in countries that have like credit infrastructure. So what are your thoughts on this development, Karen?
Yeah, so we have some form of credit structures in Kenya that was set up a couple of years ago by the central bank. And we have this several organizations in the country where commercial banks can report your credit score and credit worthiness. So if I take a loan with a bank, then it reflects in these bureaus. One is called Metropole. I can't quite remember the other one, but it registers that you've taken a loan with this bank, and it registers how you're paying. If you default on a loan for a certain number of days, I believe it's 90 days, then it shows that you're defaulting on the loan. And once you pay, you're cleared, but you have to go and pay for a clearance certificate from these bureaus. And so if you're listed on CRB, that's what we call it, then you cannot take a loan anywhere else other than fintechs. So there are some fintechs that will not look at your CRB, but most commercial banks and microfinances will not give you a loan if you are on CRB until you have cleared. And usually if you default, your name stays on for 6 years before it is removed, unless you clear the loan and you get a clearance certificate. So that's how it works here. Now, I think Nigeria has taken it a step further, where you're not able to access certain facilities within the country. Now, I feel that it might be a little too harsh. That is my perspective. I think you should not be allowed to access loan facilities in other institutions if you are a defaulter, right? If you've defaulted on a loan, you clearly have a money issue and you should not be allowed to access. But I don't think that should be a reason not to access your passport or a driver's license, because sometimes business is hard. And with the way the economy is right now, I remember during COVID, the president had to ask, and most banks had to come to a place of agreeing to give people a relief in the CRB system because businesses had shut down. People were not making money. There was no way to do it. So I think that it's important to have a credit system where you're able to see the character. I think it forms part of the character of the borrower, and you're able to see whether they're a trustworthy person who tries to pay their loans, right? But I think it has to be done with some form of flexibility and openness to the fact that the manner in which the economy acts and reacts to things is so diverse. And so I don't think that we should be in a place where we are saying someone cannot access certain services that have nothing to do with their credit because they've defaulted on a loan, unless there's a severity to which they have shown to be defaulters. So I'd like to see what kind of scale they will use to decide that up to this point, you can access these services. And then once you get to this point, you cannot access any of these services. Otherwise, I feel that the penalty is too harsh. That's my opinion.
Yeah, I agree with you. I was very skeptical when I saw the penalty because this can be used in very creative ways to target certain people. So I am not a fan as well. But like you said, let's see what scale will be used to determine this. In terms of the positives, having a credit score and being able to use that to access credit facilities is definitely a positive and one that should be encouraged.
Yeah, let's wait and see how they execute it. Moving forward, we're in Rwanda, where they are using AI in such a fantastic way to bring healthcare within reach of every citizen. And they have been doing a project that just kind of surprised me in the best way possible. They have been trying to ensure that people in rural areas are at a close range to a healthcare facility. So previously, the people, especially in the rural areas, they had to walk miles to get to the nearest clinic. And according to WHO, World Health Organization, in 2010, the average Rwandan had to walk 95 minutes to reach a healthcare facility. And they have been working very hard to reduce that time so that everyone is within 30 minutes or less of a healthcare facility. And they have managed to get from 95 minutes to 47 minutes. Talk about intentionality with projects and creating change in a country. That just blew my mind that they even have these kinds of numbers. And now they want to take it from 47 to 25 minutes. And what they are doing is using AI datasets to ensure that they are making the best decisions about building healthcare infrastructure. There's an organization that is helping the government to achieve this. It's called Sand Technologies. It's an AI solutions company. And it's using this data to say, this is where we need a healthcare facility. This is where we don't have. And they're using Google's open building dataset. And it's just so fascinating to see a government being this intentional with the healthcare of its people. And I think we have seen Rwanda before, where they are building something internally. We talked about it on the podcast, where they're building something internally for the healthcare of their people. And I think this is a very intentional government when it comes to the health of its people.
Yeah, the Rwandan government is quite progressive, and we continue to see all of these moves from them trying to improve the quality of life in Rwanda. And now I'm quite curious about going to Rwanda. But beyond that, I believe this is an interesting application of the technology because what they are doing is using the Google Open Building datasets to aggregate the population density and areas that there are a lot more people in, and then using that data to determine where to build healthcare facilities. And I think that's very brilliant. And the fact that this has government backing just increases the speed of execution, right? Because, this is a progressive government. They want to improve the country. And we have seen that even with startups, how they make a lot of policies that are favorable to startups. So it's always really good to hear about these things that the Rwandan government is doing. Of course, we know healthcare is an area in Africa that has a lot of challenges, and it's very nice to see a government try to work actively towards improving the healthcare of its citizens. So, yeah, more African governments need to invest just as much into their healthcare facilities. I mean, I won't name any names, but there's a country that is very close to me. I probably live in or possibly live in that needs to take a page from the book and see what Rwanda is doing, because it's really nice to see.
You know, the biggest question is, I even wonder, do our countries even know how long it takes most of its citizens to get to a healthcare facility? The intentionality that was in that article that is shown by the government is just top notch.
It is. All right, moving forward. AfricInvest exits 6 billion AFG Holding after doubling banking assets. So the story basically is that this investment firm called AfricInvest sold the stake in the Ivorian banking group AFG Holding after a successful partnership that began in 2022. So back in 2022, at the time that AfricInvest was coming in, the AFG Holding were struggling, and AfricInvest seems to have seen this and seen the opportunities that they could help with, and they decided to invest in AFG Holding. And over the 3 years, they have consolidated the balance sheet, and it has jumped from $3 billion to nearly $6 billion during the 3 years. That's 100% increase. Their loan portfolio has also grown from $1.4 billion to $2.5 billion, a 79% expansion. And their income has more than doubled under the partnership. So a lot of positives. And it seems AfricInvest played a large role in making this bank more stable. And now that everything has been done, they are more on a positive path. They are flying high. AfricInvest has decided to leave and move on to, I guess, invest in other players. So it's a very positive story. We've seen a couple of big exits this year. And as always, Africa is continuously showing potential that, yes, you can turn a huge profit here. And surely this encourages more investors to take a chance and invest in sustainable businesses that show a lot of promise.
I agree 100%. And I think what I love about this is they came in, they saw the opportunity, they came in, they helped them, they've doubled their assets, and then they've left. It's a very smart move. You leave when they're high, right? But also you have contributed to that growth. And I think it makes me realize that the partner you choose for investment is very important, because you might find a partner who will give you the money and then just simply sit back and bark at you to bring in returns. But you might find someone else who will actually walk that journey with you, see the opportunities, hold your hand, help you grab those opportunities. And then once you are stable, they simply exit and move forward. I think this is an eye opener for me as a startup founder, and I hope it will be an eye opener for other startup founders as well, that you can find those kinds of investors who come in to bring positive change, not just pressure in your business, and hold your hand to make the right decisions, get you to a place that is positive, and then simply exit your business. And very positive move in my eyes, and especially in traditional banking, because I don't know why. In my mind, I'm always thinking that traditional banking is dying. So when I see these kinds of moves, it's really positive. And I think it's even more positive for people in the fintech space, which is the future, if you ask me. So a way to think about the kinds of investors that you choose to go into business with.
Yeah, your last point there is quite interesting with traditional banking dying. I don't think we are there, just because, well, the traditional banks are still so massive. especially in Nigeria, at least that I know of. Traditional banks are still massive. Yes, there are a lot of fintechs, and Nigeria has a lot of fintechs, but still they rely on a lot of traditional bank infrastructure. So I don't see them going away soon. I think they need to adapt though to some of what the current fintechs are doing. But there's the trust and stability that traditional banks have that I don't think fintechs have at the moment yet. So there is still going to be a lot of people that rely on traditional banks. I use a number of these fintechs myself, but I still do most of my day-to-day banking with the traditional bank. And that's me, that's a tech person. So yeah, I think there's still a lot of space for traditional banks to innovate and still continue to be relevant. But yeah, going back to the main story, I did really like this story in general. Like you said, come in, see the opportunities, help them scale, and then leave. And choosing a partner that can help you do that is very invaluable.
I agree with what you're saying about traditional banks. I guess the right term would have been to say that the traditional way of banking is dying.
Yeah, yeah.
And still on banking, something that shocked me to the core, Ethiopia is now allowing foreign banks for the first time in 50 years. This just shocked me. I didn't know that there's a country that doesn't allow foreign banks into its ecosystem. So the Central Bank of Ethiopia has just issued a long-awaited directive that allows foreign banks and investors to formally enter its financial sector, which is a major step in its economic liberalization program. So the move comes after years of reform commitment, and there's been a ratification of a new banking law by Parliament that is now allowing foreign investors and banks into the country. Previously, it was dominated by the state-owned Commercial Bank of Ethiopia. It takes me back very many years from where Kenya has been, where we only had state-owned banks. And now I look at the economy and we have so many private banks, foreign banks. And I think competition, especially in the financial sector, is so important unless regulation is very succinct and very clear, because when it comes to things like interest rates, competition helps a lot in terms of ensuring users get the best offer. So it really surprises me that they just relied on or were dominated by a state-owned bank. Also begs the question of how this will affect their economy. Very interesting news.
Yeah, it seems Ethiopia is a conservative country from this news. And yeah, just like you, I was very shocked. I didn't know that there was a country that didn't allow foreign banks. I think when I see a move like this, I think they are thinking about attracting more investments into the country. And one of the ways to do that is to create more opportunities for investments. And in their case, they happen to be a country that didn't allow foreign banks. So guess what? You open your borders to foreign banks. These banks come with a lot of money that can be pumped into the economy, and you can start to see some more development and an increase in things like GDP and things like that. So I think that's more in line with what they are thinking. They are trying to attract more investments as their population continues to grow. I see that they have over 128 million people, and it's the largest economy in East Africa by GDP. So they are trying to make sure that they don't get left behind and attract more investment, and this would definitely bring more development. So it's a positive one. They have taken a lot of time to come to this decision. So there's definitely been a lot of thought put to it. So I believe that they would be doing it the right way. But we'll see, we'll see. We never know what incentivizes the African government. For me, I'm just speculating, purely thinking that, okay, it's to attract more investment, but You never know. But from my own lens, I think that it's a positive move.
Absolutely. And I think what you've said about them seeming to be conservative, it begs the question whether how conservative their own citizens are and how receptive they will be to international banks. So that will be an interesting move as well, because when you meet people that are conservative, it takes quite a bit of consumer education for them to trust other brands, especially when they have been used to one brand for a long time. I also think that they probably have a very large population that is underbanked. And so that creates a very cool opportunity for fintechs and payment platforms to use this as a point of investment. So if you're a founder who's in the financial sector, then Ethiopia might be a good place to think about it. But you might have to do quite a bit of consumer education, and building brand loyalty may take you some time. That's what comes to mind.
Yeah, it would definitely take some time to build, especially with money. It would take some time to build that trust from a financial institution to a country that appears to be conservative. So I think these foreign institutions would approach cautiously. Still staying in banking, Stanbic Kenya is trying to raise $100 million to back startups. I saw this headline and I wasn't sure that it was correct because banks don't usually take risks on startups. Even with loans, they take a lot of collateral to give out loans. So I was very surprised that a bank that's as big as Stanbic Bank Kenya, it's the sixth biggest bank by assets, and it plans to raise all of this money to finance startups across East Africa. So it's a very interesting development, and I think is a positive one because we're always thinking about funding, especially if you're operating in the startup space. One of the challenges that we saw even in the Startup Graveyard 2024 report, a lot of startups shut down because of lack of funding. So you're always thinking about funding for startups and where do you get these funds? It's hard as a startup to convince some of these VCs to fund your startup. Here we have Stanbic trying to play the VC role. Obviously, it will be easier for a bank like them to raise that money, and then they put out some of that money investing into startups. I believe it's a positive for Kenya and Kenyan startups as well as East African startups because they are interested in that region. It would be interesting to see how they start to use the funds once they have raised it. It's definitely one that I'll be keeping an eye out on.
Yeah, it's really exciting news, and it comes at a time when access to funds has become really difficult in the Kenyan economy. I'm sure probably Nigeria is feeling it as well, and most other African countries where the rate of interest to borrow money from a bank, which is why we're saying the traditional way of banking is dying, because most traditional banks are very risk averse. And so we were actually having a conversation yesterday with some few people, and we were saying that traditional bank loans are for people who are employed and for large corporates. If you're in business, you simply cannot really afford some of these facilities because the interest rates are so high, the terms and conditions are so restrictive when you're struggling to get a business on its feet. So as a small business owner or as a startup owner, which are two sectors that this catalytic fund from Stanbic will be targeting, becomes really difficult for you to be able to keep up with those kinds of loans. Even with the loans being at where they are, just being approved for those loans is another whole story. So this is a really good move, and I think it signals a shift in the banking system where, as I was saying, traditional banking is no longer working, and the traditional banks, while trusted, have to figure out a new way of operating in the new world order and in the new economy that the world is experiencing. And we are no longer in a world where employees and corporates are the big thing. We're now in a world where a lot of SMEs and startups are being created and a lot of innovation is happening. I'm also really excited at the target that it has, agri-tech. Agriculture is such a big thing in Kenya. We're seeing so many young people go back to agriculture, myself included, and having the technology to run our farms. We obviously do not run our farms the way our grandparents ran their farms. We want to run a seamless, automated farm, right? And so having people who are building these innovations and being funded is so critical in Kenya right now, as we see more and more young people go back to farming. And then there's the creative economy, health tech, and the manufacturing sectors. These are such pivotal sectors in the country, which excites me even more because they are funding spaces and industries that are critical for the growth of the country and not just look nice, right? They're not just, I really enjoy the fact that it's not just fintech. It's industries that are critical to the growth of the country. And I'm really looking forward to seeing how they do this. And hopefully they will do what we have just seen AfricInvest do, where they're coming in and they're holding the hands of these investors and they're helping them grow. And one of the reasons they gave was that if you simply invest in people who are already ready, you're leaving out 80% of the clients in the industry. Really smart thing to say. And I'm looking forward to how they will execute and to seeing how it will hopefully bring back life to the startup industry in Kenya, which has been struggling for the last 2 years.
Yeah, definitely a very positive development. And like you said, the areas they are targeting are not, obviously they would do some fintech, but I'm happy to see that there are other areas that they are targeting as well. Creators would be a very interesting one. I know the creative economy in Africa is growing at a rapid pace, so they are aware of this. There seems to have been a lot of research into what they want to do with this fund. So I look forward to the implementation of this.
Thank you for listening to another episode of the Tech Tides Africa podcast. Remember, leave a comment or share with your friends. We'll see you next Thursday at the same time and place you get your podcast. Until then, stay well.